A 1.78 trillion IPO is coming. And if Wall Street is right, buying SpaceX may require selling a lot of something else first. Not because investors suddenly hate those stocks, not because the economy is collapsing, but because one company has become so large that the entire market may need to make room for it. Think about that for a second. Index funds may have to buy it. ETFs may have to rebalance around it. Retail investors may rush into it. And every dollar flowing into SpaceX has to come from somewhere. Which raises a question almost nobody is asking. When SpaceX finally goes public, who gets hurt? Because the biggest SpaceX trade may not be buying SpaceX at all. It may be figuring out what gets sold to pay for it. Before we talk about the risk, let's talk about the valuation. SpaceX is expected to go public at roughly 1.78 trillion. That would instantly make it one of the most valuable companies on Earth. More valuable than most publicly traded technology giants. Which sounds crazy when you realize its revenue is nowhere near Apple. Nowhere near Microsoft. Nowhere near Amazon. So what exactly is Wall Street buying? The answer is simple. Not a rocket company. Not a satellite company. And certainly not just another AI company. What investors are buying is a story. A story that combines three things no other public company currently combines. Launch capability, global connectivity, and AI infrastructure. First, there's Falcon 9, the dominant launch system on the planet. Second, there's Starlink, already the company's largest cash-generating business and one of the world's most important communications networks. And third, there's AI, the part of the story carrying the biggest expectations and the biggest risks. SpaceX is investing heavily in massive compute infrastructure and positioning itself as a future AI platform. Put all three together and the pitch becomes incredibly powerful. Space, internet, AI. One vertically integrated infrastructure company spanning all three. That's the bull case. And that's why some investors believe SpaceX deserves a valuation approaching $2 trillion. But here's the catch. The most valuable piece of that story is also the least proven: AI. Rockets already generate revenue. Starlink already generates cash flow. But much of the AI valuation still depends on future growth that hasn't happened yet. In other words, investors aren't paying for today's business. They're paying for tomorrow's possibility. Now here's where things get interesting. Most people assume retail investors will be the first major buyers after the IPO. Wall Street thinks otherwise. The first wave is likely to come from passive funds. And passive funds don't get to have opinions. They don't decide whether SpaceX is expensive. They don't decide whether the timing is right. If SpaceX enters a major index, they buy. Period. NASDAQ has already adjusted its inclusion framework. Other major index providers may move quickly as well. Once SpaceX becomes eligible, billions of dollars of mandatory buying could happen within weeks. That's where the real story begins. Because passive funds aren't sitting on unlimited cash. To buy SpaceX, they need to sell something else. And that's when the pressure starts spreading across the market. The real trade may not be SpaceX. The real trade may be identifying the source of funding. History shows the same pattern over and over again. When giant companies enter major indexes, money gets redistributed. Tesla did it. Meta did it. But SpaceX could be much larger. This isn't a company entering the market. This is a company potentially forcing the market to reorganize around it. And that means somebody becomes the source of liquidity. Somebody gets trimmed. Somebody gets sold. The question is who? The answer may not be obvious. But many investors suspect the money could come from exactly the stocks that have led this bull market. Large cap technology, AI leaders, mega cap growth names, the stocks everyone already owns, which creates an uncomfortable possibility. Without realizing it, investors in today's winners may end up financing tomorrow's biggest IPO. And that's exactly what some analysts are worried about. One source of buying pressure isn't unusual. Two probably isn't either. But what happens when three different forces hit at the same time? First, passive fund buying. Billions of dollars flowing automatically into SpaceX. Second, retail FOMO. Investors selling existing winners to chase the most anticipated IPO in years. Third, leveraged ETF rebalancing. Mechanical selling that can amplify market moves far beyond the original transaction. Individually, none of these forces are alarming. Together, they could become something much bigger. A liquidity shock. Not a financial crisis, not a market crash. just a sudden and powerful redistribution of capital. And the timing could make it even more interesting. The IPO is expected to arrive around a major market rebalancing period. Corporate buybacks may also slow because of blackout restrictions. One of the largest sources of market demand could temporarily step aside, just as billions of dollars are being redirected elsewhere. At the same time, volatility remains relatively subdued, which suggests many investors aren't expecting much turbulence. That may prove to be a mistake, because markets rarely struggle with obvious risks. They struggle with risks that everyone assumes somebody else is paying attention to. Ironically, the biggest opportunity may not be SpaceX. Everyone is trying to estimate how high the stock could go. But professional investors are increasingly asking different questions. Which stocks become funding sources? Which ETFs face forced rebalancing? Which sectors experience temporary dislocations? Because that's often where the best opportunities appear. Not in the asset everyone is talking about, but in the assets everyone is forced to sell. A company worth nearly $2 trillion doesn't simply enter the market. It changes the market. It changes portfolio allocations. It changes index weights. It changes the flow of capital itself. And that's why this IPO matters. Not just because of what SpaceX might become, but because of what the rest of the market may have to do in response. So here's the question nobody seems to be asking. What if the biggest SpaceX story isn't SpaceX? What if the biggest story is the chain reaction it creates? When passive funds are forced to buy, when retail investors rush in, when leveraged products rebalance, the impact extends far beyond one stock. This isn't just another IPO. It's one of the largest capital migration events Wall Street has seen in years. And the most important question may not be, who's buying SpaceX? It may be, who's getting sold to pay for it?